So yeah, so here this is where we have Bitcoin today, right? So what happened is like I said, we had these entries set last time. We had price going up right here. We got a little rejection back. And actually you can go from the daily to the 4 hour. Yeah, it's a little bit more accurate. Yeah. All right. That's good. So from our first entry, zoom out just a little bit. Like, yeah, zoom, yeah, compact it. Yeah, there you go. A little bit so we can see. Exactly. Yeah, yeah, scroll. Yeah, I'm not sure what that's called, but perfect. Okay, so what I want you to do is create a support line at the low in the middle. Uh, yeah, you can create one there. Yep. And then create one below it. Yep, correct. Yep, perfect. Okay. So, and then what I want you to do is create a resistance at the top, at the high. Yep. Yep, correct. Right there. Yep, perfect. All right. Yeah, but we already got the trend line there, so that's fine. Yeah. Okay, so that's fine. So yeah, so now we could just look at this objectively, right? So now you can scroll a little bit more to the right. Yep, perfect. Right? So now we see clearly kind of what's going on, right? So we see we broke this support in the middle, right? The first support line, we came down, we tested, we created a new support right at 112,000. So we went from 115 being the main support down to 112, and then we bounced back up, right? So we bounced up and we did a little rejection. We came down, right? And then we set an entry, right? We set an entry back up to the resistance, right? Boom, we got out at the resistance, and then price shot up again to the trend line. Once price shot up to the trend line, that's also a sell, right? It's also a sell position. You could have sold right there. Bitcoin is at a top, because it could easily keep going, right? But that's also a sell position right there. But we waited smartly, right? We waited until price came back down to the support, and then we created an entry right there at 118, right? So we that was a clean entry, perfect entry. And then what happened after that? Price broke above our resistance and broke above our trend line, right? And then what happened here is we got a rejection. Price rejected all the way back down to the support again, right? So it broke down to the support, broke again below the support, came up, broke down again. And what it did right there was create a support, right? And now it's pushing up. So we still don't know. So if you see a position like this and it's in between two ranges, so we're in between a resistance and a support, you want to wait until price or the candle either reaches one of those zones, right? So either reaches up to the resistance or reaches down to the support before we make a move, right? So you wouldn't want to enter a trade. That's like a no trade zone, right? You wouldn't want to enter a trade. It's like exactly. It could go exactly go either way. So you don't necessarily want to trade. Maybe if you were to go to a smaller time frame, you could catch like a small scalp, but it's just kind of like a risky move. Like like you don't necessarily want to trade. That's more like a gamble. So in this case, like these are the type of trades like right now where Bitcoin is, you wouldn't want to trade it right now. You would want to wait to see what it's going to do. It's most likely probably going to come back down to in a 115 range, right? Possibly back down to 112 before it bounces up again, right? So those are two possibilities. Of course, another possibility is that it could go down to 116, bounce up, or it could just bounce up from here, right? It could go back up to like 118, 119, 120, maybe back to 120 again. Most likely what's going to happen here is that it's going to go back up, right? So what we want to do is we want to place a pre-entry, right? So let's open up a long position. Exactly. Yep. So place it there. Yep. Exactly. 118. Right. Fix your stop loss. Put your stop loss exactly where the support is. Uh, where the support is now. Let me see where price is now. Put where price is now. Yeah, right there. Yep. Perfect. And then put the target at the either trend line or at the resistance. To really do the resistance. 3.2%, 3.8%, or 3.2%. Okay, so yeah. So that would be an example of of how we would want to plan a trade, right? So if we're looking at price currently today, say like, okay, I want to trade Bitcoin, but I don't want to trade it right now. This is how I would do that, right? So I would pre-place a trade and say, okay, or pre-place a pre-position a trade. And that's basically how you can look at it. So now you know when price goes up into your zone of entry, now you start looking for further confirmations. So how you would do that is you're on a 4 hour now. This is a perfect place to start if you've already looked at the daily and the monthly just to get the overall range and zones, which we already did, right? So from here, what we would do is drop from the 4 hour to the 1 hour. So let's drop to the 1 hour, right? And then let's zoom in on the area where we're focused on. Yeah, you can do it just a little bit more. Yeah, you can do it a lot more. Do it a lot more actually. Yeah, from the sidebar. Yeah, perfect. Okay. So what we want to do here is now we want to create another support line, right? So let's create horizontal line. Yep. Yeah. Right. And then let's create a resistance where price is currently at, right? Which was a previous support, right? Yep. Correct. Yep. So you see how price from the left side it dropped down into that and created a support onto that zone. You see all those wicks right there to your left, those lines on from the candles, right? So what happened here is price was pushing down heavily, and buyers wanted to push this market back up. So you see there's 1, 2, 3, 4, 5, 6, 7, 8 wicks, right, on the hourly time frame. So buyers will, after this drop wanted to push this market back up. They wanted to buy back in at this price, all right? Because obviously if Bitcoin just reached all-time highs and price drops, people are looking for the re-entries. They most likely collected their profits at the top, right? So now they're looking to use those profits to re-enter back into the market. So that's what happened here is a lot of people want to re-enter. Price went up a little bit, went back up to 119, and then it did another drop, right? So it did a further correction, down into the zone. And then from here, now we're in like its indecisive zone, right? So what's more likely happening behind the scenes is that uh, there wants to be the price correction wants to happen, right? So we just reached into a new high. So usually when a new high happens, if we go back on the higher time frames, we can see that what happens is every time we reach a new high, sometimes that price wants to recorrect back down to the last support from a higher time frame. So if you quickly switch back, let's just say go to the daily, right? And now this makes more sense on the daily, right? So if price went up and created a new high, and then you see in the correction how big that red candle was on a daily time frame. So it automatically corrected. Exactly, yeah. It automatically corrected all the way back down. And then now you see from where it's at right now on the new candle of today, that it's testing support, right? So now that same support line goes back days and days and days. So you see all those candles on the left side, and they all have wicks from the first time it reached and it jumped in that zone. All the buyers were trying to push the market up, push the market up, push the market up. And then what happened after those wicks? The same thing that you see right now just happened there, right? So if you follow those wicks from left to right, you see that once it got to the right side, price did a dump and it corrected back to 112. See that, right? So that's exactly what I was just explaining when we were on the 1 hour, right? I said, okay, this is a no trade zone because this could potentially can drop back down to 112 or it could drop back down to 115, right? Because price just reached a new high. And that's exactly what it did the last time that it reached a new high, right? So we always expected to do the same thing, right? So see that big drop from 117 to 112, same thing could happen right now, right? Or the other possibility is that price respects this profound support in this area, right, where price is currently at 116, and it could bounce up from here because price already did the major correction back down to 112. So if it went up from, let's say, 118 to 122, and then from 123 or 124 it came down to 116, then that's pretty much the same amount of percentage, right? So this is a good way that you can gauge that type of movement. Is there's a percentage bar. If you go to where the long position button is on the left side, if you click the right side, yeah, click you price range. At the bottom measure, you have price range. So go to from the high, from the last high, not the current one, from the last one. Yeah, yeah, exactly. And go from there down to 112. Right? So now what that'll do is it tells you, okay, so price reached a new high and then it dropped 6% or 6.2%, right? So now do the same thing for where price is currently at. Go to the high of current price. Use the same tool. And you can see 4.8, right? Exactly. Yep. So so you can see like, okay, this is about the same move. So you can expect price to drop at least another 2%, or 1.5%. Right. So now drag that down to till it says 6%. And see it's probably at 115. Right. So now that's more realistic. Right? That's more realistic for price to drop down to right there and then bounce back up. Right? So that makes sense. Like logically, like technically, that makes sense, right? To drop a little bit more down and then push back up, and then our entry there is still valid because if price does go down into that point, and most people will see this and they'll enter right now, right? They'll enter the trade right now instead of waiting for the trade to play out. You always want to wait for the trade to play out. You don't want to get in between when it's in an in between stage because it's just gonna fuck you up. It's just gonna ruin your trading experience and possibly blow your account. Right. So in this case, you want to let it play out. You want to either come down into 115 first, and then you also could potentially place an entry off of there, but it wouldn't be that smart because again, it could still push further, right? You gotta always think like this, right? Like it can still break the rules, right? There's no there's no rules in trading to like where it has to do what you want it to do. Like at the end of the day, yeah, exactly. There's no guarantees. So you have to keep that in mind and understand, like, okay, like, yeah, even though I may understand this completely, it can just do some crazy shit that you would never expect. So you have to always expect the unexpected, right? And be prepared, right? So when it touches 115, right? What you want to see to indicate that it's actually gonna push back up, you want to see the wicks, right? So you see the candles to the left side. You see how the big red candles with the wicks. You want to see that. You want to see indication of buying pressure, right? So you want to see the buyers start to enter more aggressively into the market, right? So and even after that, you see what happened with that move. It still came back down after that, right? And the reason why was because it didn't correct yet, right? So price didn't correct. So that's the reason why it didn't break out and go up. But in this case, exactly, that's why it didn't break the high, right? Because price still didn't recorrect back down from its recent high. But in the case that we're in now, price is already in the correction. So if it goes back down into 115 and you start to see wicks and buying pressure that's pushing up, then it's more of a solid guess that price will push up from there, right? Because we are already 4.5% into the correction. So if we go 6% down into the correction and then we start to see buying pressure, then we can actually trust it a bit more once we see a push off that zone and a push and wicks off that zone to actually buy, right? Does that make sense? Okay, perfect. So that's what we want to see in this scenario, right? We want to see those wicks touch that zone, and then once we see the wicks touch that zone and those wicks hold, meaning the wick closes as a red wick, right, or even a green wick, right, but as a red wick that pushes up and then goes into a green candle next. All right, so we want to see the green candles next. We want to see another red candle going back down in the same direction. We want to see another green candle to indicate buying momentum, right? So normally we want to see this on the app, and you can see this on the daily will be more powerful. The higher the time frame that you go, the more solid the candles will be, right? The smaller time frame candles are more fickle. They don't really mean much. Like once you're below the 1 hour time frame, those candles are just for short term momentum. They're not long term. You have to start from the 4 hour. The 4 hour is like the main smaller time frame that basically the candles will hold. Like if you get a strong candle on that time frame, it usually will follow up with either another candle in that same bracket, whether it's a bearish candle or bullish candle or a green candle or a red candle, buying candle or selling candle, right? So that's pretty much it for that. Like this is how you would mark chart. This is how you would analyze a chart and analyze price action, right? Because that's what we're looking at. We're just looking how price is acting, right? And we're creating key structural levels and understanding the data. Like, okay, this is the percentage. This is how much it gained. This is how much it lost. This is the recent high. So we're just identifying, right? We're identifying, okay, this is the new high, the all-time high. This is the correction zone. This is the support. This is the resistance, right? So this is all you need. Everything right here that I'm teaching you, this is all you need to trade. You don't need a million indicators. You don't need a million strategies. You just need to understand the market in this way. And then once you master this and you just practice this, you just keep practicing, practicing, practicing. Then from there, you could add like small little subtle strategies. You could add small little indicators and things like that that will help you. But in this process, you just want to focus on this. You just want to focus on studying, just understanding the market, looking at things and being able to break it down in your mind. Right? Like being able to understand, like, okay, this is why this happened. This is why that happened. This is why I should enter this trade. This is why I shouldn't enter this trade. Right? Or this is a good time to enter this trade and this is a bad time to enter this trade. Right? So these are the things that you want to focus on, right? Just focus on this and everything will become a lot clearer moving forward, right? And practice, 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 practice. Repetition is everything, right? So just creating that pattern recognition and understanding like, okay, I can notice these things without even having to place stuff on the chart, right? That's the goal. The goal is for you to be able to see all these lines and all these things that you're doing on the chart without actually having to do it. So you can just look at a chart and already understand all of these things that I'm explaining to you, right? Like that's the goal of where you want to get to. But in the beginning, you have to do all of this stuff to build that up, right? So it's just it's doing reps. You're just doing reps in the gym. It's the same thing. The more reps you do, the better you become at it, and that's it. So exactly, for your eyes, you're training your eyes to see certain things, right? And I can tell you from experience, after 6 years of doing this, like just train to see certain things. Like I can see certain things in the market. I don't have to chart it all the time. Like I just do the charting just for further practice, and just because this is you're never perfect, so you're always gonna keep studying and keep practicing, right? But it's just a habit at this point, But I don't need to do it if I don't want to. I could just look at a naked chart and understand what's going on without having to do everything. It just makes your job easier. Even when you do understand it, you'll still do it just to make your life easier. It's just so you can look at multiple charts and then come back to it and not have to just sit there and dissect it for 20 minutes. Just using your eyes, you actually just look at the chart. But that's why TradingView is such a cool tool. It's like a little, like I don't even know what to call it, but it's like, yeah, this great thing that you have in your back pocket, you know, that it helps you execute your trades a little strategically.